And we're getting in more breaking news coming in. GDP numbers are out for the April to June quarter. Well, GDP numbers coming in at 13.5%. This is the April to June quarter that we are talking about. This is more or less in line with what was expected. In fact, upwards of 15% is what largely experts were expecting. So it's come in a tad bit lower than that. But nonetheless, it is a strong set of numbers. So important here to know that this is a result of base effect that is playing out at this point in time. Just further numbers that are coming in. Manufacturing sector coming in at 4.8%. Mining growth about 6.5%. Farm sector growth, always an important number to catch up for, is a 4.5%. So these are some important breakup of the GDP numbers coming in at this point in time. So those are the details here coming in, 13.5% for this quarter. Remember, in the two. All right, we've got Tamanna joining us for more details. Tamanna, more or less in line with expectations, upwards of 15% is what largely was expected. But important to point out, this is a base effect still playing out here.
So let me just take a second to explain what that base effect exactly is. So the news is that between April to June of this year, the Indian economy has grown at 13.5%. The expectation was that the growth would be a little over 15%. Now, the question always to ask is 13.5% compared to what? So last year, at the same time, between April to June last year, the economy grew at 20%. So relatively, it's a slower pace of growth. But to get the full picture, you'll have to go a year earlier, because remember, we were hit with the COVID-19 pandemic, etc. And the year earlier, we shrunk by 24%. So in a sense, the economy is still stabilizing. We are growing, we are recovering, but the pace of recovery may have been hampered in this first quarter because of a number of reasons, primarily among them, geopolitical situation, what was happening between Ukraine and Russia, inflation shot up, crude prices went up, and that has seen some kind of spillover in the first quarter. But the broad headline sort of coming out of the GDP numbers right now for our viewers is that we've grown at 13.5%. The expectation was slightly higher, but we are showing signs of solid recovery.
Thanks, Tamanna, for getting us all of those details. That's as far as the GDP numbers are concerned, but we're getting in some more perspective here as well. Sanjeev Ahluwalia, economist and advisor ORF, is joining us on the broadcast as well. Thank you very much for speaking to us here on Mirror Now. Your first reaction to the GDP numbers of 13.5%.
Yeah, you know, we must remember that this is actually history. You know, we are sitting in August and these numbers are only up till June. So, and we're all led by the media analysts. So as you were mentioning, and Tamanna was also mentioning, I think people were expecting slightly better numbers. But I think even this is pretty decent because, you know, it is actually a sort of a statistical mirage that we have to look through because 2021 and 21-22 were bad years. So as a result of that, GDP growth is not a very good number to look at. It's much better to look at where is the GDP today versus 2019 and 2020. And I think if you do that, it'll probably come to somewhere below 6%, between 5 and 6% growth. But that's not bad because if you remember that we closed 2020, last quarter was I think below 4% growth. So it certainly shows that even in absolute terms, you know, in real terms, we have gained about 2% of growth quarter on quarter. And so that's an upward trajectory. Of course, not as sharply upward as the nominal numbers would show you, but we have nothing to be disappointed about. And I think we have to cheer the fact that the services sector is again up and running. As you know, that is what basically pulls the GDP up in India because it's a very large sector. It contributes almost 60% share in GDP. And that was severely affected by the COVID years. That is up and running. Manufacturing, again, growing slower than what it should because the basic problem is there is a lack of domestic demand. And there's a lack of domestic demand because of the global uncertainty, that we face. Because of that, fuel prices were high. Of course, another good news is that fuel prices have again come down. And for the August month, the average price of the imported crude, as far as India is concerned, because there's the Indian basket we market to, is below $98 a barrel, which is much lower than the higher numbers that we've seen earlier. And Indian economy and growth in the Indian economy is very dependent on the price, very sensitive to the price of fuel. So the fact that our government has taken steps to bring the price down, including buying cheaper crude from Russia through a good diplomatic engagement with Russia and with the rest of the world, I think is a big boost for all of us, the entire economy. So manufacturing will take a little bit of time to pick up, I think, because that is related to the level of domestic demand that manufacturers see. It's not just a matter of credit. Credit is freely available, has always been. But ever since we have these strict bankruptcy laws, people take credit only when they know that they have an underlying revenue model to support it. So
right.
that entrepreneurs are being very conservative in their assessments too. All this points to a well-functioning, well-regulated economy. And the stock market, as you know, is doing very well, unusually, because the rest of the world stock markets are not doing that well. And I think it's doing well purely because of the strong leadership shown by the Reserve Bank of India in ensuring that we do not go into a situation where, our rupee goes in for a free fall, in ensuring that interest rates remain real so that investors are getting a real return on whatever they are investing here, whether they are foreign investors or domestic investors.
Right.
And as government is going, it's taken the right fiscal measures. As you know, FM has been very, very aggressive on that right from the time that COVID started. So there's reason for hope.
Yes, absolutely. In terms of, the COVID recovery from the entire COVID scenario itself, do you think the entire recovery has sort of come in now? And also a word on demand, because demand, despite everything that we've seen in the past year, the geopolitical factors, etc., demand has managed to sustain quite strongly. However, now with interest rates rising, how much of a dampening effect do you think that can have?
Yeah, I mean, interest rates actually affect two segments of the economy. One is, of course, investors who invest in productive goods like industry and so on, because cost of investing goes up. But don't forget that, what is important also is the growth prospects that industry sees. So if industry sees that growth prospects are improving, I do not think that interest rates will come in the way. Similarly, if growth prospects improve, foreign investors are the first to latch onto a high growth country, or at least a country that is going reasonably well, but is growing sustainably, so that they're not fluctuations month on month or quarter on quarter. And I think India qualifies on both those counts. So I suspect that, as I said, that it's a matter of time, but private investments in industry will also pick up, because the slack, the unutilized capacity that's lying with them,
right,
will become less,
right,
and they will stop investing additionally in new capacity too. And
right.
One thing, though, of course, we have to look very seriously at is exports.
Yes.
Because though the world is not in a good shape, but even then, the only way of going around low domestic demand or nascent domestic demand, as you put it, is to look to exports. Because, a big place, we don't export much. It's very small as a percentage of the total exports. So if we are forward looking, I think we can push that case very well. And we have a lot of goodwill today. I think that's a very important point, that the strong diplomatic engagement of the government has brought us a lot of goodwill in countries which are traditional importers of Indian goods.
Yes, absolutely. That's an extremely important point that you mentioned there as well. But I'd like to thank you so much for joining us with your perspective on these numbers.
Thank you.